Stock Charts Trading. Today we're going to be talking about the retail market. More than 7,500 stores have closed in 2020. Places like Ann Taylor have closed 1,100 stores. Tailored Brands, Men's Warehouse have closed over 500 stores. Pier 1 has closed over 450 stores at the same time that Lowe's and Home Depot stock is going up. Remember, Wayfair has gone up almost 1,000% in the last couple of months while Pier 1 is closing stores. What's going on? New York & Company has closed almost 400 stores. And a byproduct of that is unprecedented masses of layoffs. Cineworld closed every movie theater they had worldwide, impacting over 45,000 jobs. So it's not just the stores are closing, now the mortgages aren't being paid, now the employees are being let go, now they're not being paid. Even Disney World, one of the biggest retailers, let go 28,000 people. Ralph Lauren, another retailer, lets go of 15% of their workforce. Coronavirus has rendered nearly 10% of shipping containers inactive. 2 million of these containers did not come into our ports like the years before. That's a whole lot of product. New York Times says inflation is higher than the numbers say. While the government statistics say inflation is low, in reality, the cost of things is much higher. So if you look at this normal pack of cocoa, you would see that it's only $3, but it used to be $3 with 10 packets inside of it. Just recently, they keep the same package size, keep the same price, but dilute down the number of packages inside the container, meaning you are paying 40% more than what you paid for this a year ago without even knowing it. So when we look at a natural case of supply and demand, like less inventory coming into the country, like less stores to be able to buy our product from, like less people being able to afford these products as they go up in price because they're unemployed now. And on top of that, the companies that have closed these stores have to either default on these stores' mortgages or use the supply and demand that they have at the store that is currently open, take those profits and feed those mortgages that of those closed stores. So when I look at a chart of XRT and I see that we're making the highest highs ever, I have to ask myself why. Back here in 2007, we also had some really high highs before falling off because of the subprime mortgage problem. Well, if stores are closing, then aren't they going to have mortgage problems? So shouldn't we be shorting XRT right here? We have resistance. We just came into this resistance. With them closing so many stores, where's the thrust of money coming from? With so many people who are unemployed, how are these stock prices going to go higher when they're probably not going to be buying new clothes? You could use these lows for support line. Right here is when the market turned and started to go up. Do you think with all the drama of the election and everything that we'll come back to these $26 lows or even this diagonal low at around $24? Another way to trade this would be DRV, which is a real estate ETF. You can see right here at the turn of 2020 when the pandemic started to hit and everybody started to panic, this went up over 200%. It came up into this resistance level and quickly sold off. My question is, all this new drama of stores closing, will this go up again? Right now, it's around $12. If it went back to these old highs, that would be $60, giving you almost 500% profit. So when you read news articles like struggling retailers rush to file for bankruptcies of fears of a second wave of coronavirus, what does that tell you should do for the news of the stock market? Isn't that weird that this was August 21st and now we are in October and XRT is at its highest highs? Either the news is 100% absolutely wrong, or we're getting set up for a very big turn. Ring that bell so that way we put out that next video, you'll be able to watch and follow. Leave a comment below of what you think of these trades.